Amid all these different friction points in the relationship between the US and China, how is the mood? What is the sentiment amongst your members here on the ground in China?
Naturally, Tom, the members are quite concerned about US-China relations. And so what we're trying to do is to remain the ballast in the relationship, where we try to keep the things commercial on track such that the two countries can then hopefully build from there.
Part of the ballast, it seems, is this phase one trade deal. We've been hearing from both US and Chinese officials saying they are committed to getting this phase one trade deal over the line and done. Those purchase commitments from China were always seen as pretty significant and maybe difficult to achieve. And now we've got this economic slowdown. Now we've got the impact of the virus. The Europeans telling us, the European Chambers of Commerce, that the phase one deal is essentially dead. Are they wrong? Is it possible to achieve this deal?
Yes, it is possible. I believe they are wrong. And I've heard the same rumors about the deal coming apart and such. But we have interaction with both U.S. government and China government that tell us differently. And so at this very time, 3 weeks ago, I sat at the Ministry of Finance with a senior official who's a member of China's negotiating team for the phase one deal. And we were talking about how our member companies could be a part of implementation for phase one. And so that process seemed quite sincere. It was also inconsistent with what we saw in some reports about the deal coming apart. And we've also since then seen purchases on the ag side and other things. That's not to say that things can improve. And indeed, COVID-19 is terrible in every respect, also as to the phase one trade deal. Things can improve. China can buy more agriculture. Currently, or at least as of a couple of days ago, there were about 130 oil and gas tankers on the water heading to China. I think 7 of them were American products. And so we would like to see more ag purchases. China can buy more airplanes, all those things that would really move the needle on the phase one trade deal. But in any event, again, I'm seeing sincerity in the process and both sides trying to get it done.
Greg, in terms of you put out a business sentiment survey, and I just wondered, beyond the trade tensions, what are the key concerns for your members as they kind of shape up and square up to the impacts of the virus and the slowdown in the economy? What are the number one things that are kind of holding back operations at the moment?
Overwhelmingly, our members are concerned about global travel disruptions. And so in our most recent survey, 90% of the members highlighted that as their number one concern. And that's up from 77% from the April survey. So we need American company executives back on the ground in China so that they can move forward with investment decisions and current investment plans. Not only do the executives need to come back, but they want their spouses and children with them, and they want essential support workers like nurses and doctors and educators so that their kids can actually go to school. China is working with us, and we're in close contact with central and local governments on this. And there is a fast-track process that they're trying to bring forward, and we're working with them very closely on that and relaying all that information to our membership. But again, our folks need to get back on the ground so that they can drive the business.
And speaking of driving the business, Greg, David here, by the way, in Hong Kong, we were speaking with a market analyst yesterday, and her view as far as the earnings outlook within China is concerned is that we don't go back to 100% earnings capacity this year as well. Yes, business conditions have improved, but not to the extent, I guess, as most of your members would want. Help us understand what part of the earnings story that your members are concerned of right now.
Sure, David. We see different things across different sectors. And so For instance, technology is rather bullish, and 30% of the respondents in the technology sector expect increases for 2020. Whereas if you look at consumer, about 21% said that they're expecting more than a 50% hit to revenue. Manufacturing is, better. Demand side is still kind of weak, but if you look at manufacturing, there's just 1 point shy of half says that they're at 100% back to full productivity. So again, different sectors see different things. Now, there's a lot of cost cutting going on. So in each sector, folks are being conservative. But we also see that there's continuity in investment plans, a fair amount of continuity even for 2020, and then significant continuity for the longer term, which is, say, 3 to 5 years.